as an investor, I think I've evolved in a couple ways. One, I'm more willing to invest in technology. I'm more willing to pay a higher near-term multiple for truly great companies where I am willing to look out 3 to 5 years. And very importantly, I think it's critical to let your winners ride.
You do talk about the market being, in the long run, it shouldn't be affected that much by what these events are, right? Which brings us to your investment strategy. Could you speak a little bit more about that and how it has evolved over time?
Sure. Well, look, there's my personal investment strategy, and I write or co-author 2 of the 5 publications we have, but my colleague Enrique Abeda writes the other 3, and then my other colleague, Berna Barche, we're going to launch another product under her umbrella. She's currently just writing a free daily. I have been, it's sort of funny. So under the Empire Financial Research umbrella, we have a real diversity of opinions and investing approaches among the 3 of us, Enrique, Berna, and I, who give the stock recommendations and write our publications. I have been, and Berna really have both been classic value investors. We pray in the church of Graham, Dodd, Buffett, and Munger. And we've been long short investors, focused on fundamentals. And frankly, that's been a tough road the last 10 years or so. Value investing is substantially underperformed growth investing. I'm delighted that more of a growth investor like Enrique, who even publishes a weekly trading newsletter for us, a SPAC newsletter, and then a long-term growth where he's looking for 5 to 10 baggers, Empire Elite Growth. It's been very healthy having him under our umbrella because I've learned a lot from him. Because I will say, we value investors tend to be too focused on near-term valuation, whereas growth investors look 5 years out and dream about where a company might be. And classic value investors say, yeah, but you can't predict 1 quarter out, much less 5 years out. So shame on me. I used to own Amazon a long time ago. I owned Apple a long time ago, and they went up a little bit, and then I sold them. And I should have obviously just hung on, and I'd be worth hundreds of millions of dollars right now if I had simply held on. I should also mention Netflix. I owned it literally the day it bottomed 8 years ago, about a 60 bagger ago. So that's a particularly painful one as well. So, as an investor, I think I've evolved in a couple ways. One, I'm more willing to invest in technology. I'm more willing to pay a higher near-term multiple for truly great companies where I am willing to look out 3 to 5 years. And very importantly, I think it's critical to let your winners ride. And again, if you're just focused on near-term valuation, I found, Netflix went up, at the bottom, I went on national television. I published a slide deck. I gave a speech at a conference basically showing that Netflix on a per subscriber basis was being valued at 1/10 that of Hulu, a far inferior business. So in other words, I had correctly identified a 10-cent dollar that we now know was a 10-cent dollar.